Biotech has been crushing it over the past 2 months, the sector roundly outperforming the S&P as a host of companies are working on major innovations in the fight against coronavirus. Everyone from institutional to retail investors are betting on biotech these days. Inflows into the ETFs have shot up over the last few months, and the momentum could continue. Here to go inside this trade is Michael Yee. He's managing director and equity analyst at Jefferies. Michael, it's good to see you. And I guess my main question for you is kind of, let's skip what we think investors are doing. What would your advice be? Where in biotech do you think people should be putting their money?
Yeah, thanks for the question. Good to be here with you, Kelly. We're telling people two things. One is that, particularly with the improving backdrop of political rhetoric and improving sentiment around the FDA, we strongly believe that the large cap biotechs, the Amgens, the Vertexes, the Regenerons of the world, great companies with great pipelines can continue to move higher. Those stocks have been out of favor for a year or 2 years, given all the rhetoric. Those stocks can move higher. And then the second part is we're telling people to be a little bit more cautious, a little bit more hesitant about some of the euphoria and froth that we're seeing in some of the moves in these smaller mid-cap companies that have had vicious moves to the upside, a lot of it with COVID-related developments, and to be a little bit more cautious here given the recent run.
Yeah, no, and that's understandable. Absolutely. We've seen a lot of that last couple of weeks, especially. So let me ask you about Regeneron, one of the big cap names you mentioned that is involved with coronavirus, I think also working on a vaccine. We've spoken to the CEO about that a number of times. Would you recommend that because of the potential exposure there in spite of it, or kind of disregarding it?
Yeah. Well, we're telling people with these companies that have COVID developments, whether that's Regeneron, I think Gilead, probably top of mind for a lot of folks, is that while those are incremental positive developments and from a short-term trading perspective, probably going to continue to keep the news flow and kind of the sentiment, positive sentiment around some of those stocks, we're advising people that there is going to be limited or at least hard to value stock appreciation out of those, just because those are going to be difficult to price and difficult to monetize. Make sure that companies like a Regeneron, which have a huge antibody drug discovery pipeline behind it, or a Gilead, which obviously have a lot of things going on behind COVID, are going to be able to back support some of the longer term justification.
I'm also reminded by the companies who have been hurt by all the coronavirus focus, Merck, for example, others where kind of the routine visits, the cancer treatments and that sort of thing, they're not seeing the numbers that they once did. I know that's not biotech per se, but is that affecting the way that you would invest across the biotech sector? Are there any catch-up trades to make, for example? And I guess this is a two-part question then, because I also, before you go, wanted to get your thoughts on Moderna and on whether this messenger RNA is too risky to bet on right now because it's never had a proven drug or vaccine yet, or whether it represents the dawn of a whole new era and investing opportunity.
Yeah. So to your first question about sort of the impact with COVID and the disruption to the healthcare system, we're not seeing a huge impact. And that was one of the big analyses we came out of, not only recently because we think it's a bit of a short-term disruption, and you are obviously starting to see volumes come back, but actually because of names like Amgen, which has impact because they have a lot of hospital-based drugs. Those stocks have been so out of favor, Kelly, for a year or two. They're trading so cheap, 13, 14 multiples, that there's a lot of room for those types of stocks to move up, not because of the short-term disruption, but because of the longer-term value that people are seeing out of that. So that's what we're saying about some of those big names. On the Moderna front, which you brought up a great question, I know there's a lot of questions around how much we can have confidence in some of that recent data today. This is an important first step, phase 1 data, generating antibodies. It's important for that platform, both from a safety perspective, and of course, they need to be able to manufacture and ramp that up. I think it's all positive developments early, and we're going to have to wait for a lot more data in hundreds, if not thousands, of patients that are getting ramped up in phase 2, 3.
So
the good news is just that J&J is coming right behind them. Pfizer with data coming imminently. So we've got a lot of good news on that front.
So you're not saying that people need to necessarily place their bets on Moderna right now?
Well, what we're saying is there's been a huge run in that stock. I think there's a lot of questions around, obviously, the vicious move up to the upside. It's great for the platform, and I think there's a consensus around how this is going to be difficult to justify.
All right, Michael, I squeezed a lot in there, but as always, I really appreciate it. I know you can cover so much ground. Michael Yee is Jefferies' equity analyst for the space and managing director.